Welcome back. I'm Pratap here, and we are analyzing the reports for 28th February 2024, even though today is 29th February 2024. A small announcement, please, before we get into our analysis part. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. And you can access all the training lessons from our YouTube channel NeoStock. Scroll down to the playlist Supply Demand Zone Price Action course, and click on this playlist. You will be able to access all the training lessons from this playlist. I have also provided the link to this playlist in this YouTube video description. If you click the link, you will get into this page, and then scroll down to the bottom of this page. And here, starting from lesson 1.1, all the training lessons are kept in an order. Please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this YouTube video description. Please join in the Telegram channel so that it will be useful to you. Each time when we release a new video, we will provide an update in the Telegram channel. Now let's get into our analysis discussion. And this is a Nifty 50 chain we generated on last Sunday. There we have defined the different levels. What will happen if each of these levels are broken, if any of these levels. So Monday and Tuesday we have seen the price movement between these two levels, between this high liquidity 5-minute supply zone and high liquidity 15 minutes demand zone. We have seen few long trades. And yesterday what happened? This zone is violated. That means this range is broken. Now, as we expected, the next range is started here from this high liquidity demand zone, which is inside 75 minutes. This entire area is 75 minutes. Inside 75 minutes, we have a 15 minutes demand zone. Below that, we have a 5 minutes trap is also there, bear trap. And 25 minutes demand zone also there here. So this is the new area, this is the new range Nifty got. Because this is violated, let us delete them because a new range is established now. Now this is going to be the new range, this 75 minutes zone till this 5 minutes high liquidity area. Now there is going to be a fight between this 75 minutes area, that is a demand area, and a 5 minute supply area, which is going to be strong. That is what we have to check in the coming days. But today, you see, today what happened? There is a below, within this 75 minutes high liquidity zone. This entire thing is 75 minutes high liquidity zone area. Inside this 75 minutes high liquidity area, we have seen a 25 minutes demand zone and a 15 minutes high liquidity demand zone. Just below this high liquidity demand zone, there is a bear trap. This is a 5 minutes trap. See here, we have a 5 minute zone. Let me expand. We have a legging candle, rally candle, and two base candles, and again a rally candle. This is the 5 minutes area. This is a 5 minutes bear trap. Let me add the text. As I told you earlier, mostly the traps you will see below the high liquidity zones. Just below the high liquidity zones, institutions keep the traps. What they do? They will ensure these high liquidity zones will be violated, but the real order flow they will keep inside these traps. So for this 15 minutes high liquidity zone, institutions kept a 5 minutes bear trap, and today prices entered into this area. This is yesterday's, this is not yesterday, I'm sorry. Yesterday is here. This was yesterday's price movement. Those who traded on 50 yesterday, you would have got some trades, long trades from here. Maybe a good movement, and after that prices went, this is the first 15 minutes area. From here prices are picked up. After that again prices entered in this area. From here again they picked up. And this is yesterday's trades. So definitely yesterday you would have got something around, I don't know, because I didn't look into the yesterday's market. This is somewhere around 21950, and here it reached 2245, 47. That means close to 100 points, maybe something around 95 points. You would have got a profit yesterday, because this is the entry point, right? That is what 21950 is, somewhere around is your entry point. And 2247 could have been somewhere here, it could have been your exit point. That is the way, because here we have supply zones are here, the 5-minute supply zones. So yesterday we would have got something around close to 95 or 97 points profit you would have got. And again after that this zone is violated, the first one, because here we have multiple zones are there. Yeah, this is the first one, sorry. Go to our left. Somewhere here, we have a drop, base, rally. From there, orders are picked up. That is fine-tuned 5 minutes area inside 15. After that, prices went deep, and another again picked up from deep inside this zone. Again, it would have given another maybe let me say below this. If you would have taken a trade, lower low, because prices next moment mostly prices go little deep below this previously tested area. Generally what people will do, experienced people, because this is the one prices previously they went up to this here, next level probably they go a little deep below this. That's why somewhere here probably people will plan a trade. 2192. Okay, it went even more deep inside. That is a different story. Most of the time prices will come here and then it will move. Let us assume with that analysis, if you would have taken a trade around 21933, you would have got a trade. Again here some supply zones are here. That is around 2 to 16. And here it is a 2 to 925. That means another 90 points, close to 90 points. Move again you would have captured. And today what happened? These liquidity areas, the 25 minutes demand zone or 15 minutes demand zone, whatever you have drawn, they are gone now inside this 75 minutes because they are already violated. Let me delete to make you understand better. This is again a newly created one. See here today, this is today. Today is the 29th. Now I am recording on the live market. Around at 11 o'clock today, I am recording. Sorry, at around 11:30. And you got a trade at 10 o'clock 10 minutes. You got the trade 10 o'clock 5 minutes and 10 o'clock 10 minutes. This is a trap because above that you have seen a 15 minutes high liquidity zone, the one we just deleted. I'm just showing you how exactly orders are, from where the orders are picked up. Definitely another close to 100 points move it would have given. Let us check. Let us see the entry for this entry price is around 21868, and here you have a supply zone, rally base drop. Assume somewhere here you sold 21996. What is the order? 21868. Around 21868. Let us say 21 for easy analysis. 21870. The round value 21870, a little above. Assume you have taken a trade 21870, and here you book the profit 21995. I'm giving some round value, 21995. So you got more than 100 points. 125 points move you captured here. See the ranges how we have drawn. This was the range we have drawn on last Sunday. And today you would have got from this bear trap, we would have identified this bear trap, 5 minutes bear trap, because we've been discussing about traps for the last 3-4 months onwards. We have seen several trades taken from the traps, and they're all successful trades. And today is the another one. That's why the analysis we did on Sunday by supply demand zone chain for NIFTY. And I told you to do the same analysis for Bank NIFTY. I have given you the exercise. I don't know how it worked out because I didn't analyze the data and I am not monitoring. But those you who have done a Bank NIFTY analysis, similar way how I did a NIFTY analysis, NIFTY 50 analysis, because Bank NIFTY I gave you the data. You would have drawn on the charts by taking the data. Exactly the same way how I used. See, my complete analysis is based on the high liquidity zones. I am treating high liquidity zones will act as support and resistance. Those zones, that way correlated. Exactly our correlation is working very well and giving good results. Yesterday you might have seen 2 trades within that 15 minutes high liquidity zone area or 25 minute zone area. And today that 15 minutes high liquidity zone area is violated. Just below there is a bear trap, and from where the orders are picked up. Probably the next attempt, maybe it may work or it may be violated. That is a different story. But the first time when prices entered into this bear trap, it gave a very good move. 125 points move it has given approximately. Because I am roughly calculating today. See, I just came from I went outside yesterday to attend some marriage. I just came and fresh up quickly, and then I started recording this video. Not even know what is really happening. Just below that 15 minutes high liquidity area, I saw this 5 minutes bear trap. Exactly from where the orders are picked up. This 5 minutes bear trap is inside 75 minutes high liquidity area. See, here we have a 75 minutes high liquidity area. Inside the 75 minutes again, see today there is a price action. You need to identify whether there is any 15 minute zone is established here. If any new 15 minute zone is established, probably a new zone will be created. From there, next time again it will pick up the orders. If no 15 minute zone, probably this zone might be violated, this 75 minutes. Now range will be going to this, the next daily demand zone, having a 15 minutes high liquidity zone here, inside this. From where the orders will pick up. In case this 75 minutes high liquidity zone is violated. But if these 5 minutes high liquidity zones are violated, mostly market will reach the all-time high. But at this point of time, this is going to be the range. Unless one of these zones are violated, the next range we cannot establish. Currently, this is the range. Because 5 minutes high liquidity is not violated, we can't look for all-time high. All-time high only when these zones are violated. Maybe a new all-time will establish. And again, new supply zones will be created at all-time high when prices are coming down. Our software again may detect a new high liquidity 5 minutes or 15 minute zones. Probably next Sunday during our analysis, we will identify what could be the ranges for the next week. But time being this week, whatever analysis we did, that is really working well. Okay, this is about NIFTY 50, what happened yesterday. Even currently, during the live recording, what's really happening, that is what we discussed. Same thing we do for our high liquidity zone generated on day before yesterday. Yesterday you got the trades. Yesterday's data I didn't generate high liquidity zones because I am not available. Now I will be generating in my next videos. Probably by the time you get the video, it is going to be late. You might have missed the opportunities from our yesterday's data, but still, for our reference purpose, how high liquidity zones are working. We should keep our data. First, let us see what happened to our yesterday's high liquidity zones. In yesterday, we have identified 4 high liquidity. I mean, not yesterday, day before yesterday. When I said yesterday, it means day before yesterday. So we have to analyze what happened yesterday. Even what's happening today also we will see. Because I have to calculate all these ROIs, any profits or losses. Now only, approximate values only we will get. The reason is, today the margin cost would have been changed. So that's why whatever the calculations I do, it's approximate values. First we will take Asian Paints. Asian Paints, day before yesterday, our analysis discussion, I have explained how I fine-tuned this zone. Because we didn't get trade day before yesterday. But yesterday, prices reached into this zone. Day before yesterday, during my analysis, I told you some interesting points. Let me tell you what it is again. Let me remind you. We have identified 2 75-minute zones. This is the first 75 minutes zone, and this is the second 75-minute zone. And in the first 5 minutes, the second 75-minute zone, we have fine-tuned. I already explained in our day before yesterday. But day before yesterday's data, whatever I explained, the first 75-minute zone prices reached, and the second 5-minute zone, the prices did not reach. But today it reached, and it gave an entry today. Those who would have taken a trade today, you would have got a very good profit today. But we have to calculate how much profit. Just before starting this analysis, I just looked into the chart, I surprised. Exactly what we fine-tuned, we got an entry. But this is already a tested zone. And in this tested zone, we got the entry even today. 2 entries we got. That means this is working like a high liquidity zone. Because it is tested, mostly you would not have taken a trade here. Because once the zone is tested, we won't take a trade. Unless it is confirmed as a 5 minutes high liquidity zone. Because we don't know, we didn't test on this particular 5-minute zone. A rally, 3 base candles and a rally. But anyway, there was earlier price action close saying that this is a strong liquidity area. See the rejection just before entering into this. Second time also see, before entering, the price is pushed from this. Third time, it gave an entry in this zone. Fourth time also gave an entry today. Fifth time also gave another entry today. 2 entries it gave today. Okay, this is the second zone. But what about this one? And when it comes to this one, yesterday prices entered into this area, and this is violated yesterday and also pierced first. But before that, let me remind you the points I told you on day before yesterday's analysis video. We didn't get it because the day before yesterday prices didn't enter into this zone. That's why we didn't get a trade, but our software again identified this zone for our yesterday's trade. So accordingly prices came. But yesterday we fine-tuned here. Inside 75 we have drawn a 5 minutes. Inside the 5 minutes we have drawn a inside 15 minutes we have drawn a 5-minute zone. But what I told you, just before there is a 5-minute zone which is going to be act as a trap, a bear trap. That is what I told you. Because it is holding the prices. Probably this trap area is having the more order flow, probably. What I told you yesterday, maybe you can consider, this is the day before yesterday's analysis I told you, consider this is an entry and trap area distal line is your stop loss. Of course, you will add some buffer, stop buffer, and a little below you keep your stop loss. Because I've been talking about stop buffers for a long time. If any of you did not hear about stop buffers, very soon you will be learning. The next lesson 19. Currently we are discussing lesson 18. During this weekend we will discuss practicals, lesson 18 practicals. Probably during mid of the next week I will release lesson 19. There we discuss about stop buffers how to calculate stop buffers, all the points I will be telling you in detail. I should also provide you, once after completing the session, I should also provide you everyday stop buffers with the help of our software for different time frames. Okay. So yesterday, that means this is going to be entry, this is going to be the bear trap. Because why we are not taking two separate trades? Because between these two zones, the gap is a very negligible gap. That's why there is no meaning taking a second trade, exit from the first trade and taking the second trade. There is no meaning. You have to take entry here, you have to exit. And also I told you, those people who feel risk is high, I suggested you take an entry in this 5 minutes trap area. But if prices are turning by touching this fine-tuned 5 minutes area, and if you go up, you will miss the trade. That is also I told you. So that's why let us take this as an entry. And this is the stop loss. A little below this stop buffer, stop loss will be there. So what is the entry? That is the open of this candle. Up to that we have fine-tuned. What is the open of this candle? 2805.90. $2804.90 is supposed to be our entry. Sorry, 2805, not 4. 2805 point, let me see once again. 2805.90. That means 2806 approximately. Supposed to be the entry. And stop loss is a little below this distal line. But what happened yesterday? Some interesting analysis you have to do here. Yesterday, prices gave an entry here, but the zone is pierced and again went to the bear trap area. That means this entire thing is, we combined both these zones, bear trap area, and it picked up the orders. Then it holded the prices. It didn't push. Now, that means yesterday supply is very strong. You have seen Nifty, yesterday's Nifty. Yesterday is a very bearish market. But here the orders, they were holding the prices. Some more orders it picked up. See, the second candle also. Third candle, what happened? Pierced. But does it hit our stop loss? No, it didn't hit. It is yet to hit because you are within this stop loss buffer area. Maybe below some, the institutions kept more strong orders just below this. Maybe yesterday they would have kept new orders. That's why see the rejection from here. That means very strong in this area. Demand is very strong. But luckily what happened? Our stop loss did not hit because we are within the stop loss buffer area. Maybe some more, maybe another 2 or 3 rupees below, if prices went, our stop loss would have been hit. This is one advantage of stop loss buffers. You will understand stop loss buffers once I explain in our lesson 19, the upcoming lessons. Meanwhile, we are within the trade. Again, the supply is very strong. Once again, it tried to push. Institutions kept more new orders here. They don't want their trades to be violated. Again, prices moved up, moved up, moved up. But what is our target? Our target is supposed to be 15 minutes target. So where is the 15-minute zone? Here we have a drop, base, drop. But the problem is, our trade is supposed to be like this. Earlier, as per the plan, this would have been your target. That way you got RR, enough RR. But what happened yesterday? This candle is created after your trade. Generally what happens? You have a drop, base, drop. This candle is a live candle. It is not completed. That means during your trade, this new supply would not have been confirmed. Generally what happens? Drop, base, drop, the candle has to be closed, then you confirm this is a supply zone. But before closing, you got the trade. Generally what happens? From our high liquidity zones, they pick up the order and again prices move up very fast. That way drop, base, drop would not have been confirmed. Generally, this may not be a drop candle. This could be a ERC, failed ERC candle. Most of the times prices will go up and then finally reach this target. But yesterday's situation is different. You picked up the orders. After you picked up the orders, then only the candle is closed and confirmed this new target. But still you are within the trade. Initially you planned. If this candle would have been formed before your trade, you would not have taken a trade because there is no enough RR. From this zone, from the supply zone, there is no enough order initially. But from this demand zone till the supply zone, you have a good RR is there. At least you get a minimum of 1:3 RR you get here. From this 5 minutes demand zone, you will get at least 1:3 from here. Let me show you, at least close to 1:3. Long position, see here, you would have kept, this could have been your stop loss a little below, and this could have been your trade. Approximately I am drawing, and this could be your target. So it is 1:2.89, that means 1:2.9, so close to 1:3. Generally if you are an experienced trader, 1:2.5 mostly will accept. So anyway it is close to 1:3, 2.9. So you would have taken the trade, you got a good RR here. But what happened? Because after your trade, a new candle is formed and your target is changed all of a sudden. That means your target is reduced. Now how much RR you are going to get with this new target? This is the one, 1:0.9, say 1:1. But you can't help. You need to exit from your trade with this 1:1 RR itself. Or you need to, if it hit the stop loss, you need to exit. Whatever the stop loss, same profit you are going to get. That's it. But it reached the target. Zone is pierced, but you are within the trade due to stop buffer. After that, prices recovered and reached 1:1 target it reached. If you would have waited for your original target, it would have been a greedy. And yesterday, your stop loss would have been hit somewhere in this candle. See, institutions created again a rally-based drop and hit your stop loss. Somewhere here, your stop loss might have been there. Somewhere here, you would have exited from the trade. If you would not have revised your target, you have to revise when institutions create new supplies. You have to revise your target. You have to respect. That's why always I say markets are dynamic in nature. When markets are dynamic, obviously you need to change your targets where new supplies are created, 15-minute supplies. At the time when you take a trade, this candle is not completed. Generally when prices, it looks like a rally-based drop when you take your trade. But generally what happens after it pick up the order flow is, if the order flow is very strong, prices again will go up. That way, after that this candle will be closed. At the time when a candle is closed, you see a long wick. Instead of long body, you see a long wick and price would have been closed somewhere inside this zone. Then you cannot draw this zone. A long wick and price is closed inside this zone, you cannot draw a supply zone. That is not a valid supply zone because it is a failed ERC and not having enough body and also not having candle close to support a new zone. But today is a special scenario. After we picked up the, after your order is triggered, you would have taken a trade, and after that prices did not go up, prices stayed here only. Moreover, it pierced the zone and closed inside the zone. Because the moment closed, what it confirmed, a drop, base drop, and confirmed a new supply. Because it confirmed a new supply and your stop loss is yet to hit, so you need to revise your new target. Because of the revised new target, your RR is changed to 1:1. But already you are in trade. So you have to compromise. Because the supply is having a new order flow. See how strong yesterday the market is, even this Asian Paints also. So picked up the orders and pushed the market further down. So when next time prices enter here, what you have to do? You need to exit from the trade. When you want to exit from the trade, so what should be your target value here according to this new target? It would have been open of this candle 2811.20 minus 2811.20. So let me change it to positive value. So you got only 5 rupee 30 paisa profit. That's it. Very minimal profit. What could have been overall profit? Let us look into the margin calculator, Zerodha. See, my calculations, what I am showing you are the rough calculations. Please understand. If you want to know the exact calculations, you have to go to futures chart. And whatever the price is there here, I already explained you how to take in futures. There you take the price and also the target also similar way. You will see sometimes a difference of just 1 rupee or 50 paisa difference you will be seeing, like what we discussed earlier. The last Q&A session, we have discussed all these points. Those who are not aware of how to trade, how to analyze equity market, but taking the trades in the futures market, I have explained in the last Q&A. Please go through that video. Okay, here what happened now? Let us look into the margin calculator. Actually, we are supposed to take yesterday's margin because yesterday I am not in the market, taking today's margin and assuming they are more nearly equal. Definitely some difference will be there in the margin, but that doesn't make a huge difference. Because that doesn't make a huge difference, let me say these values are approximate values. So which stock we have to look for? Asian Paints. 200. See, this is quantity is fixed, whether yesterday, today, or tomorrow, until stock exchange revise these values. The quantity will be 2. Generally, every 6 months once they will revise the values, the quantity values. Lot size will be revised by the exchange every 6 months once. Until that period, you will be having this. It remains 200 only. So 5.3 into 200. 1060. If you would have got a loss, you would have got 1060 loss. Because it is a 1:1 trade, your profit would be 1060 only. You just narrowly missed this loss. Actually, you would have got this loss because the zone was pierced. Those who are exiting the trade exactly at distal line, you would have got 1060 loss yesterday. But generally we use stop buffers. Because many times what happens, they pierce the zone, but within that stop buffer area, order flow will be there. That's why again they reverse back. That is what happened for Asian Paints. Previously also we have seen couple of trades, they just pierced some 5 paisa, 10 paisa below the zone. And we were in trade, but at the time it gave good profits. But Asian Paints scenario is different because a new 15 minutes revised target is very close to the zone. That's why we got only 1:1 trade. 1060 is the profit. Okay, anyway, you should be happy. Yesterday you should have been happy. Instead of getting loss, something profit you got. Something is better than nothing, right? And something is better than even, much better than getting the loss. So 1060. So what is the margin amount? This is the approximate value. Maybe yesterday it could have been 1 lakh, maybe 700 rupees or 800 rupees. Maybe today it is showing 1,461,000. Okay, so let us assume this is an equivalent value, close to equivalent value. So that's why whatever the, see 1060 is not equivalent value, this is the exact value. But what I am calculating ROI is equivalent value. So into 100 divided by no, it is 1%, 1.1%. 1.05 means the round value is 1.1%. You got 1.1% profit. Or those who did not use a stop buffer and exited exactly at distal line, you would have got 1.1% loss also. But anyway, we are always calculating by keeping some stop buffers, because we have to follow those rules. Those who haven't landed supply demand zone so far, probably they are not aware of this concept. But whoever is following my high liquidity zones, probably you are aware of these concepts, because you have already completed your course somewhere outside in some other. But those who are currently attending the training, I already told you not to trade until completion of second phase of the training program. I only told you do paper trading. So those who are doing paper trading, you might have got 1.1% loss because you haven't learned stop buffers, probably without adding. See the advantages of doing paper trading. You will come to know, okay, I got the loss. I would have avoided this loss if I would have added a stop buffer. So at the time of learning stop buffers, you will learn the concept with much accurate way, because you already narrowly missed the trade, which you are supposed to get a profit of 1060 rupees, you got as a loss. Reason you didn't learn the concept stop buffer, but you are doing paper trading. So this is an experience for you. So next time when I teach these stop buffers in lesson 19, you will understand. Lesson 19, you will be learning stop buffers, you will be learning position size, and all these are all some risk management related concepts. The final chapter of our risk management. So far you learned 2 chapters in risk management. One is in phase 1 training program you learned. Type 1, type 2, type 3 proximal lines adjustment, you learned risk management. And then again you learn in second phase, fine tuning the zone. In lesson 16 you learned how we can further reduce the risk. And the final chapter of the risk management includes position size and stop buffers. Okay, anyway, this is going to be your profit, just 1% or 1.1%. Narrowly we escaped from getting this loss. That is what you have to understand. Those who are already learned supply demand zone course and aware of all these concepts, this is your profit. Those who are not aware of these concepts, still doing trading or doing paper trading, you would have got a loss. That is because you didn't learn the concepts. And those who are not completed, currently attending the course, not completed, because we have not completed the second phase of the training. I only suggested you to do paper trading. But those people ignored my advice and doing real trading. You have to understand, I am not responsible in case if you blame me. Of course, none of you are doing that. Maybe in your inside your mind you might be thinking, maybe we don't know, we didn't learn. But I told you not to do any real trading until the completion of the phase 2 training program. You have to follow my instructions carefully. See, people will spend 6 months time for learning all these concepts. People will spend, and then they get into the real trading. And initially also when they get into the real trade, they do small quantities. And then only they do the trade. Like they buy few stocks, 5 stocks, 10 stocks. If the price is a small value. If the price is big, like 2000 rupees stock or 3000 rupees stock, probably they just buy only one stock and they do the trade initially until they get some experience. But before that, you have to do paper trading. That's why I put a strict rule. Until the completion of the second phase of the training, you have to do only paper trading. Paper trading will teach you many concepts doing paper trading. You won't get the real losses. But why you got the loss? You know the reasons. How to avoid the loss? You know the. See, today is the best example, Asian Paints. How you would have avoided the loss? Just by using a stop buffer concept. Next time when I teach that concept, you understand very easily that concept. Because you already experienced some loss while doing paper trading. Okay, this is about Asian Paints. Okay, this is yesterday. But today what happened? That is what you have to understand. We already a fine-tuned area. Definitely, I'm sure none of you would have taken this trade. The reason is this zone is already tested zone. Because this zone is already tested previously, see here previously we have tested, this zone was tested. That is what I shown you in the beginning of this. See here, this zone is already tested. And moreover, prices went deep also. Only some more small buffer is there below this. So definitely you would have avoided this trade, I'm sure, 100%. You would not have taken. Maybe this could have been a high liquidity zone, this rally, base rally. That's why it is supporting multi-test. Not only multi-test, before this zone is tested, see the rejections below this zone. From here, went up, below this zone, prices came and a wick. See the wick here. Moved up, prices after that moved up. Again prices trying to reach near the zone. Again see the wick, strong order flow. That's why on this day, whoever taken trade on this, it would have been a very successful trade. See how much profit it has given. It would have been a very good successful trade. Because such kind of zones will give. And because prices went deep inside, mostly you don't dare to take this trade. Unless you know this zone is a high liquidity zone. But we don't know this is a high liquidity zone or not. Only our software only can confirm at 5 minutes time areas. Because we don't know, you won't take a trade. But unfortunately, what happened today? If anybody would have dared to take a trade, I'm sure you would not have dared. If you would have dared to take a trade in this zone, see now almost close to, earlier it went very deep inside earlier, and the remaining pending orders in this zone, just before the distal line, also very strong in this zone. See, now very close to the distal line, it didn't hit. The prices were inside the zone only, but they went very close to the distal line, and see the rejection from here, huge rejection. Maybe this rally base drop, let me draw a supply zone here. See, it reached the target. See, prices went into the supply zone. Let us see approximate profit. Anyway, these are not real profit, just to check, because we are checking the power of the high liquidity zones. See, you would have got a profit. Approximately, I am saying here, what is the target here? 2803.60 paise. Minus, what is the entry? Somewhere here, 2778.95 paisa. Let me say 2779. Is it 2779? Yeah, 2779. You would have got 24 rupees, 24.60 paisa, close to 25 rupees profit. What is the last cost? 200 rupees into 200. You would have got 4,920 rupees, close to 5,000 rupees, we can say. Not very close. So we can say 4,900, close to 4,900. Profit you would have got. So into 100 divided by say 1 lakh 5,000, close to 1 lakh 500. 4.89, say 4.9, you would have got 4.9% ROI. Sorry. This is the first trade. This trade is completed. See again, it gave again another trade in the same zone. It gave you 4,900 rupees profit. Again one more trade. Why it is happening? Maybe it could be a high liquidity, 5 minutes high liquidity. Maybe, I am saying maybe. Why I am saying maybe? Because it is supporting multi-testing. Multi-testing means it need not be high liquidity. It is at least 80% confidence. Only we are saying it could be a high liquidity. Because algorithm checks some other rules also. But I am saying it could be a high liquidity zone. That's why. Because we don't know it is a high liquidity, we missed all these trades. What I am showing you is the trades we missed. Because we didn't have clarity. Only software only can. Even I also cannot say this is a high liquidity without checking the software. Even though I developed the algorithm, because the data is checking from the year 1994 and analyzing the data. Okay, 5 minutes data I am not having from 1994. 5 minutes data, 15 minutes data, all this data I am having only for the last 4 or 5 years. Somewhere 2020, I think, or 2021. Maybe 2020 onwards I am having the data. The last 5 years data it will analyze, still it will identify because the zone is within the last 5 years only or 4 years only. See here again, it gave another test. This time what happened? Our yesterday whatever the target we expected, till that point it reached. Because this zone, this 5 minute zone is, sorry, this 15 minutes supply zone is already tested. See how it is violated. The reason for this 5 minutes, sorry, this 15 minutes, not 5 minutes. The reason for this drop base, this rally base drop. This is the rally base drop. The reason for violation of this rally base drop supply zone is, it is a tested zone. Once a zone is tested, it is violated. But this 5 minute zone, why it is not violated? It has to be violated. It is already tested. Moreover, prices went deep inside earlier. Even then it is not violated. That's why I am saying this could be a high liquidity zone. If not here, maybe you would have realized this could be a high liquidity, you would have taken a trade. That is one possibility is there. Another possibility, in this zone prices went even more deep inside, close to the digital line. You would have avoided this trade also. That is also possible. Somebody realized if this could be a high liquidity zone because it is testing several times. Earlier price action clues also very strong and dared to take a trade, you would have got profits. But these are all different permutations and combinations. But in reality, definitely you would not have taken a trade because earlier this zone is tested and not confirmed it is a high liquidity zone. But why I am calculating just to check how well these zones are working by assuming this could be a high liquidity zone. Why I am assuming already historic data is there. What is historic? This trade is completed, this trade is completed. That's why I am able to tell you. When really prices entered into this zone, even I would have told you don't take a trade. Why? Because I don't know this is a high liquidity zone. Unless my software confirms. If I would not have looked into the software, like how you people are trading, exactly the same way if I am also doing, definitely I suggested you not to take a trade. I think in our last day before yesterday analysis also I might have told you. This is a already tested zone. But still why I have drawn this zone? Because even though I draw a zone, always some doubts will be there in my mind. This could be a high liquidity area. Why I am having some doubts in my mind? Because of the strong order flow I have seen from this zone earlier. Strong order flow means some price action close, rejections, twice there are rejections before entering into the zone. All those points put some doubt in my mind. That's why I have drawn this zone for reference purpose to check whether my doubts are really right or not. Because, see, I should also keep on learning, right? I am not believing whatever the knowledge I have is the ultimate knowledge. I never believe that. I always feel, even I have to learn. It is like an ocean. There is no end. Nobody is perfect and nobody is expert. Continuously we have to learn. That's why I sensed something really going to happen in this zone. That's why even though the zone is tested, I have drawn this zone. That is what I shown you in our day before yesterday analysis discussion. But today, see how nicely it gave a trade. See this, even the latest trade, this is the second trade on today. This is the first trade today, this is the second trade today. It gave an entry and even reached the target. How much profit it would have given? This 15 minutes. The one above, in case if you are assumed this will fail and prices will reach, that is what happened. If you did that kind of analysis, how much you would have got? Let me show you. And the open of this is the 2811.20. $2811.20 onto this demand zone entry. Earlier we have taken 2779, right? 2779. This time you got 32.2 into 200 stocks. This time you would have got 6,400. Earlier we got 4,200 we got. Now 6,440 into 100 divided by, what is the margin cost approximately? Okay. 1,461. Let us say 1,000, sorry, not 1,000, 1 lakh 500. $6.4. You would have got your ROI, average ROI 6.1. We achieved that in the second trade. But anyway, these are all just, what to say, calculations only. They are not the real. The real is only when you know this is a high liquidity zone. Just to tell you what we missed, I am showing you. But even I cannot put them in our Excel sheet also, these trades. The reason is our software, yesterday's software, definitely it won't display because yesterday's price is closed inside the zone. Definitely our software would not have listed this zone. But those who took risk based on day before's data and took a trade because there is a zone, even though it is a tested zone, still you have taken. All these possibilities are 99% invalid possibility because nobody will think like this. Even I won't think. It is a tested zone, I won't take a trade, that's it. Which one? The 5-minute zone. Always we have a rule, 5-minute zone should be a fresh zone, then only we take an entry. If you want to take second entry in 5-minute zone, it could be a high liquidity zone. At least you should sense, if not the software, at least you should sense. Your sixth sense should tell you at least this could be a high liquidity zone. How can your sixth sense will tell you? If there is some strong reasons are there, then only it will tell you. Just to tell you how high liquidity zones power, I am just showing you the statistics, nothing more than that. Those people who have been listening these videos for the last 2-3 months, by the time you are already aware the power of high liquidity zones. But newly joined people, recently subscribed to our channel, and listening these videos, at least they should understand the power of the high liquidity zones. Just to make them understand the power, I am telling you. But we are not considering them as a real trades. Just only understand this is how the real high liquidity zones works. These kind of zones our software algorithms identifies. Just to tell you that I am showing you this list. Okay, otherwise we will move on to the next trade. NMDC. NMDC is a daily high liquidity zone. This is a rally candle. This is not a base candle, rally candle, because hidden gap, hidden body you will be adding. If you add a hidden body, this is going to be a leg candle. Leg in, 3 base candles and a rally candle with a gap. Again, pro gap and hidden body you will be adding. So it is a valid leg out. That way our software identified this zone. And inside I didn't find any proper fine-tuned area. There is no 15-minute zone available inside. But even then I have drawn a 5-minute zone and I am saying aggressive setup. Let me show you, just for learning purpose, how we identify aggressive trade setups. Let me show you how I did the analysis. Anyway, yesterday we didn't get a trade in this zone, but my analysis part is important for you. See here, we have identified a 75-minute zone inside this. We have 1, 2, 3, 4, 5, 6 base candles. Maybe I am considering this as a leg candle, a medium size leg candle, and these are all base candles. That we are assuming. Some people may not convince this is a leg candle. That possibility is also there. You may consider this is the leg candle, 1, 2, 3, 4, 5, 6, 7, 8, 9 candles, and you will say this zone is an invalid zone and it will be violated easily. That way also you can tell. But why I convinced, just want to see whether I can find any 15 minutes order flow inside this. That's why I have given a benefit of doubt and consider this as a leg candle. Nothing more than that. But even then I did not find a proper 15-minute zone inside. So if you look into this, inside the 75 minutes area, even though I have given a benefit of doubt, see the candles here, this is a leg in candle, 1, 2, 3, 4, 5, 6, 7, 8 candles, base candles. So definitely this zone will be violated. You may ask a question, then why we analyzed the 5 minutes? Because this price action made me some interest, to show some interest on this area. Why there is a rejections from this area? Not only rejection, there is a good move from here. That means there is a strong order flow in this area, somewhere below this. If that order flow, who could be the reason? Definitely 75-minute structure is a doubtful structure. The leg in candle, okay, I compromised and I have drawn the zone. Even then 15 minutes also not having. 75 minutes is not clear, 15 minutes clearly said this zone is not good. Even then I shown interest because of this rejection and the move from here. Such kind of move you get if there is a strong order flow here. So who could be the reason? That's why with that curiosity I went to the 5 minutes. That means bypassed the 15 minutes and went to the 5 minutes. Obviously this could be aggressive in case if it qualifies. It could be an aggressive trade. See here we have an excellent zone. Drop 2 base candles and a rally candle. If you don't want to consider this is a rally, drop 3 base candles. This is going to be a rally. Even if you don't want to consider this as a rally candle, drop 4 base candles and a rally. Either way you can draw. Okay, I have considered this is okay leg in, because when you zoom you will get clarity about this candle when you zoom in. Because we are comparing with the other candles, right? Comparing with the other candles. See here, drop 2 base candles and a rally candle. All the comparing with the previous candle, they are all small. Compared to them, this is a big candle. That is the way I have taken a decision. But you zoom out, You will be seeing even other big candles also. This one looks like a small candle. Okay, anyway, comparing with this 15 minutes area, and one advantage is drawing like this also, your risk also minimized. Aggressive trade setup, if you reduce the risk as much as possible, that will be good. Because aggressive trades, they are aggressive. It doesn't mean they have to work because we bypassed the technique fine-tuning the zone. What is fine-tuning the zone? Inside 75, there should be a 15. Inside 15 only, you have to identify 5 minutes. But here our 15-minute zone is not at all good. There is a zone, not at all good. 8 base candles are there. So we compromised 15 minutes, went to 5 minutes. Because you compromised, we are calling it as an aggressive. That compromise. So because of this aggressive trade, we have seen 5 minutes. And earlier there is rejections. Even next time also, if there are rejections, you can confirm this is a guarantee real order flow in this area. This aggressive trade is having a real order flow. Suppose prices came close to this, again they move back. That confirms a strong order flow in this area. That's why the prices are moving. So next time price enter into this area, this 5 minutes area, definitely you can plan an aggressive trade. Obviously, aggressive trades are quite risky trades, but you have strong reasons to support that risky trade. Without price action close, if you take aggressive trade, it is a 100% risky trade. It is luck based only. Your luck is good, okay, the trade, luckily it will work. Otherwise, that zone will be violated easily. So never go aggressive trades without any price action clues. That is the point we've been telling several times from our previous analysis onwards. For the last few months, we discussed several times aggressive trades. Every time I say, you should be very careful. There should be strong price action clues. Otherwise, you cannot bypass 15-minute zone and directly get into 5-minute zone. Or you can bypass 75-minute zone, directly get into the 15 minutes. You cannot do that. You have to follow the fine-tuning the zone technique properly. Fine-tuning the zone technique clearly explained in lesson 16, zone confluence. Okay, this is about NMDC. Next one is UBL. UBL is also a daily high liquidity zone. Yes, rally base rally. This is the UBL. Yesterday, prices reached into this zone, and see today, those who would have holded this stock would have got profits today. Why not yesterday? You may say there is a rejection yesterday. Why not? Because the prices entered into this zone only during the last 5 minutes of the trade. Last 5 or 10 minutes. Last 5 or 10 minutes. Even last half an hour also you won't take trades. For intraday point of view, I am telling. Those who want to carry the positions, they would have taken a trade. Today would have got a good profit today. First, how I fine-tune? Let me show you in 75 minutes. This was the previously, I think I didn't delete, let me delete. Okay. You have a ERC candle, this is a leg-in. You have 2 base candles and you have a leg-out candle. Drop base candle and leg-in is a ERC candle, 2 base candles and a rally candle as a leg-out. So this is 75 minutes. Inside this, we have to identify 15-minute zone. This is a daily zone. Inside this, we have a 75-minute zone. And inside 75, we should identify a 15-minute zone. So here you have a leg candle, base candles, and a rally candle with a gap. The 15-minute zone. I think I didn't draw the 15-minute zone, but this is the 15-minute zone. So within this area, we have a 5-minute zone. So this is the one. We have a leg candle, 3 base candles, and a rally candle. After that, you have another follow-through candle. And for 15 minutes, this is like a pro gap, but 5 minutes, it is a gap from the follow-through. This is also you can consider as a pro gap, but not from the zone. This is in between. But for us, more important is here, prices entering. If any pending orders in this area would have weakened the demand, definitely would have weakened the, not demand, I'm sorry, supply. Because supply is consuming the demand, right? So within the pro gap, we have a pending buy orders according to the 15-minute zone point of view. And these pending orders would have consumed the supply. So supply would have been weakened by the time prices entered into this. But if you look into yesterday's data, only last 5 minutes or 10 minutes only it entered into the zone. See, this is yesterday. Yesterday at 15:25 minutes candle, prices entered into the zone. So do you dare to take a trade during the last 5 minutes or 10 minutes of the trade? No, we never. Even last 30 minutes also we don't take trade for intraday point of view. 1 hour we can take a trade. Earlier I told you, I gave an explanation also how to trade last 1 hour or 1 hour 15 minutes. Target should be only 15 minutes. Within high liquidity zones only we trade, not the remaining zones. Within last 1 hour or 1 hour 15 minutes, you can take a trade, intraday trade. What I mean intraday means not in cash, in F&O. Cash, your broker won't give you any option to take a trade during last 1 hour. He won't allow. But F&O, you can take a trade. And you can exit. Anytime you can take a trade, you can exit. Generally, last half an hour, we don't dare. You can take, there is nothing wrong, you can take a trade. There are no rules that you should not. But nobody will dare. And moreover, this is last 10 minutes, last 5 minutes only. This is 15:25 minutes candle. Last 5 minutes candle. And this is today. This is only the 15 minutes target. The reason this is a leg candle, base candle, drop candle. That way we can draw a supply zone. See, prices came very close to this. But for those who holded the positions yesterday only, it is possible. But practically, we are looking for only intraday point of view. But why I am showing you this stock? Just to tell you the power of the high liquidity. High liquidity zones are powerful. Okay, those who are attending my sessions or these high liquidity zone analysis sessions for the last 2 months or 3 months, you already might have understood the power because you have seen several trades and how they are working. But recently, many new people joined and probably they might have learned their courses outside in some other places. They may not be knowing the power of the high liquidity. Some of the members newly joined also learning the course. Maybe they didn't learn earlier, now they are learning. For those people, you need not worry. These videos you can start attending after completing your first phase of the training program. even second phase also up to lesson 16 if you complete, then you are eligible to watch these videos. Then you will understand. Watching these videos early doesn't help you. Those people who did not complete up to lesson 16, focus only on your training lessons. Don't focus on these high liquidity zone analysis lessons. After completing lesson 16, you can focus on high liquidity. You can start watching high liquidity zones. Anyway, I will keep a message also in our Telegram group so that people will realize. See the power of the high liquidity. It would have given more than more than 6.1% ROI. Even though it didn't reach the target, still you would have received 6.1, more than 6.1 ROI by this time. How many points already it has given? This is 1648 rupees, it's approximately. Now 1671, 72. 24 rupees profit you got. Definitely you would have reached more than 6.1 ROI by this time. Just to tell you the power of the high liquidity, how they are holding the prices. You just drawn the zone, it is holding. A perfect way. See, those who are drawing the zones, as per the technique you learned in lesson 16.1, that is fine-tuning the zone based on the concept zone confluence. Fine-tuning the zone is a technique. That technique I explained you in lesson 16.1 and also in lesson 16.2 clearly with practical examples, live examples. I mean live charts. If you follow the technique, high liquidity zones, it is working very well. That is what you have to understand. So this is about UBL. And next one is Voltas. Voltas is a 75 minutes zone. And I didn't find you in the zone completely. The reason is this is a very old zone. May 2022. And the data is also not available with us in TradingView. That's why I left this. Only 15 minutes and 75 minutes analyzed, 15 minutes area. 5 minutes area we are not aware. To check the quality of this zone, at 5 minutes probably you need to take the help of NeoStock's supply demand zone chain algorithm. We have to take the help. Anyway, I didn't have the time also, so I couldn't fine tune. Anyway, even prices also did not enter in this area. Yesterday I was not in. Today the moment I came my home, immediately I started recording this. I didn't find any time to look into these zones. So this is about what we identified in our day before yesterday. This is the analysis I am supposed to do yesterday. Because yesterday I was not available, today I am doing for our reference purpose. Only Asian Paints is the only one, narrowly we missed the loss, but we got a profit of 1060. Very, very small profit, just 1:1 profit only. And that too because of dynamic nature of the market. What is dynamic nature? Because market created a new supply zone. Because of the new supply zone, our target is changed, and we are, instead of getting 1:3 RR, we got only 1:1 RR, close to 1:1 RR. But we have to limit with that. And also you have seen the experience, you have experienced the power of our high liquidity zones by seeing Asian Paints already tested zones. Maybe that could be a high liquidity zone, 5 minute zone. That's why we have seen today 2 good profits. And also you have seen yesterday UBL. We didn't take a trade because that is the last 5 minutes. Because every day we are checking only intraday performance. We are not carrying the positions. It doesn't mean high liquidity zones you should not carry the positions. You can carry, but other supply demand zone rules also should satisfy, like trend, price direction, location, all these things you should properly do analysis. High liquidity zones during intraday, during the intraday only you want to exit. For that high liquidity zones, you don't bother about trend, you don't bother about price direction, you don't bother about location. Just ignore them, even they are not in your favor. Still high liquidity zone works at least one intraday trade point of view. At least one intraday trade point of view. Of course, sometimes few trades will fail. That failure rate is very small compared to our success rate. In 200 HLQ trade video I shown you, for the last 200 trades, the success rate is 88%. Failure rate is only 12%. Even though we expected 20% failure rate. So that's why without any fear, bother about the trend, bother about the price direction, bother about the location, we are just simply taking the trade. Only supply demand zone price action concept we are using for high liquidity zones is fine tuning the zone. That is the only technique we are following. Remaining all we are just ignoring and taking a blind trades. Maybe that is the right word. High liquidity zones, we are taking blind trades, just ignoring the trend. Against the trend we are doing the trade, in favor of the trend we are doing the trade, against the price direction we are doing the trade, even against the location also we are doing the trade. We are not bothering about them at all. But intraday they are giving good profits. And that too they are giving extraordinary profits. 6.1% ROI is an extraordinary during intraday. Generally 6.1 is the target for short-term trade. When you want to hold the position minimum 3 to 5 days, for those trades you get around 5% ROI, 5% to 6% ROI you will get. But we are getting the same ROI during intraday itself. That is the power of high liquidity zones. Okay, we will take a break here and we will continue from here next video because I have to generate our yesterday's reports for stocks near demand and supply zones, and maybe you might have missed those opportunities, but still I have to generate the videos for our reference purpose at least. So let's all meet in our next video. Thank you.